Hi, this is Tim Biggam, and this is Vol 411 on a day where we're seeing the VIX right at that upper boundary of the regime of volatility, bounded by 16 to the downside, 22 to the upside. Last I looked, VIX hovering just below that 22 level, briefly broke above it when we saw the market sell off sharply at the beginning of the week here. So we'll see if it stays within that regime or heads higher here. Interesting point certainly on the VIX. As far as put call ratios have softened from over 131 on Tuesday, closed at about 0.87 yesterday. We're seeing the SKEW come down sharply under 140, the lowest level since early April. More a function of that VIX lift here as well. We're seeing the VVIX perk up a little bit, made a move towards 100 earlier in the week, but now around that 120 level. We're seeing notable activity in the October traditionals, the 25 calls and the 17 puts being the biggest volume so far on the day. Interestingly enough, we're seeing that term structure of vol really flatten considerably, short-term lifting. That's being reflected in the straddle price, our 15-day straddle that we like to look at. Last week, trading at a vol that was certainly much lower, trading at about 10 points net with a vol right around the 14 level. Today we're seeing the implied volatility on that same 15-day straddle up over 18. We're seeing the straddle price actually increase to $12 from 10 last week, even though the S&Ps dropped sharply. So that shows you the kind of short-term angst we're seeing in the market. We'll see if that continues or not. So until next time, this is Tim Biggam, and this has been Vol 411.